welcome back to Finance for Firefighters. Today we're going to talk about short-term rentals. We're going to use an example in Dallas, Texas. Firefighter income on a W-2 is taxed really hard, but what if you could use a short-term rental to lower your taxable liability by tens of thousands of dollars a year? Here's our example. You have a California firefighter who lives in Sacramento, married, filing jointly, 2 kids, 2 dependents, makes a modified adjusted gross income of $150,000 a year. And let's say that firefighter put 20% down and they bought a house in Dallas, Texas for $375,000. Let's assume that that property is bringing in about $2,000 a month in rental income. So what makes this qualify? Well, it qualifies as a short-term rental based on a few different things. So the maximum stay is 7 days or less for a short-term rental. You or your spouse must materially participate. You can do this by managing the listings, handling bookings and guest messages, coordinating cleaners and repairs, tracking expenses and mileage, all of those kinds of things. You don't need real estate professional status. Let's go through some bonus depreciation basics. The building portion of your rental can be depreciated quickly. Land is not depreciable because it doesn't go bad. Enter cost segregation, and we'll dive into that in more depth in the next episode. A cost segregation study shows approximately 25% of the property qualifies. So in our example, a $375,000 property, the land, let's assume, is worth $75,000 and the building is worth $300,000. So based on a bonus depreciation, about 25% of that building would be about $75,000. And thanks to the One Big Beautiful Bill Act, we can depreciate all of that in 1 year. So the $75,000 deduction goes against that W-2 income. So you're effectively lowering your modified adjusted gross income significantly by that, which could reduce your federal income taxes a lot. So depending on that person's withholdings, up to $15,000 to $20,000 per year based on how much you're able to deduct. So the more rentals you get, the more you're able to do this, and the more you're able to lower your taxable income every time you do that. The benefit is you still collect that short-term rental income, and the value of the property typically appreciates. It means the value goes up, even though you're writing off the depreciation of it. Can I do this multiple years? The answer is no. Bonus depreciation only works for that first year. What if I don't use all of it? Well, you can move it forward to the following year, but consult your CPA for the specifics. What if I use a property manager? It may disqualify you for materially participating. What disqualifies me? Well, if the short-term rental is rented out longer than 7 days, you're disqualified. If you're not materially participating, you're disqualified. And if you don't keep good records of your participation, you may be disqualified. Short-term rentals and bonus depreciation is a huge tax loophole, but you must materially participate and you have to track your hours. Thanks for joining me on Finance for Firefighters. Same as always, there's quick links in the descriptions below for guides. Give a thumbs up if you like it, comments for any feedback that you have. Hope you guys have a good shift. I'll see you in the next one.